Yes, we are live now. Start.
Can I start?
Yes, yes.
A very good evening to all the attendees of the webinar. I, Vrushali Shah, committee member of Bhuj branch of WICASA, welcome you all to this third day of the 5 days GST knowledge series, a series which provides a knowledge, practical aspects, and much more. I must say, we are lucky that Rajkot branch of WICASA, along with Bhavnagar, Bhuj, and Gandhidham branch of WICASA, has organized a webinar on the Apna most wanted, not a bhai, but a tax, that is GST. Today's thrilled episode is on a refund of ITC under GST. Before that, allow me to give a brief introduction of our today's speaker, CA Abhishek Doshi sir. He is a fellow member of ICAI and Commerce graduate. He is a partner at KSD and Associates, having office at Rajkot, Gandhidham, Ahmedabad, and has been in practice since 2008. He is mainly engaged in the practice of GST, income tax, finance, and audit. He is regularly appearing before the adjudication and appellate authorities for GST or service tax matters. He has delivered lectures on the topic of GST and service tax at seminars organized by branches of ICAI, trade bodies, various associations, and service tax department. He is also a regular attendee of various study courses on service tax and GST conducted by CTC, ICAI, and other forums as a group leader and coordinator. He has been chairman of Rajkot Branch of WIRC of ICAI in the year 2014, and the branch has been awarded Best Branch Award in the large branch category for the first time. He is a member of a study group on indirect taxes formed by ICAI. He is also one of the empaneled faculty for GST by ICAI. He has also been associated as a mentor with GST World, a nationwide group of indirect professionals which aims at providing comprehensive consultancy and litigation services for goods and service tax to various corporates. Now, before we move on, you all are requested to note down your doubts through the chat or comments section, if any, and you will be answered at the end of the session. So, now I request Shri Abhishek Doshi sir to take the charge of the session.
Thank you, Rushali, for the wonderful introduction. First, let me share my screen. My screen is visible, right?
Yes, sir.
Yeah, sure. So let me start with thanking to the Rajkot Branch of WICASA, team Rajkot Branch of WICASA, led by Bhavin, for organizing such wonderful series on the topic of the GST. And as rightly said, this current time is a perfect time for having this series because students' exams are also delayed, and even in articleship offices are mostly there will be very less pressure of the work in the offices during this time. So I must say that Rajkot Branch of WICASA has correctly utilized this time in organizing this series on GST. And I also must compliment all the other three branches, Bhavnagar, Gandhidham, and Bhuj branches of WICASA, for joining the hands with the Rajkot branch of WICASA in organizing this series. And it's really a wonderful joint event. As we all know that situation outside is really worse, and we all must take care of ourselves, and not only ourselves but our loved ones also, right? So please keep avoid going outside to the extent possible, and stay safe, stay home, right? When I and Bhavin were discussing about this series, and Bhavin said that we want to give the most of the practical aspects to the students, that they should have the experience of some of the important and practical aspects of GST, which will be useful in their day-to-day life and even in their articleship life, right? So we have decided this topic of reversal of ITC under the GST. Basically, it's a reversal, but we will, I can say we will cover entire kind of the ITC topic, right? We will more focus on the reversal part, but mostly we will cover the entire ITC part, because only we can understand the reversal part very well, right? And this topic of ITC and reversal is kind of topic which is a very much of practical use, right? And we can give and discuss the various practical issues on this ITC part, but we have limitation of medium. Our session cannot be interactive at this time, right? But do not worry about it. You can have your questions, you can post your questions, and we will try to resolve the same at the end of the session, right? I will try to make session as much as possible to cover the practical issues, and you can very well raise your questions at the end of the session, right? So let's start with our today's topic. Contents, as I said in the beginning, that we will discuss not only the reversal part, but we will discuss the entire concept of the ITC, right? So first we will discuss the ITC concept. What is the ITC, how it is derived, and what are the other features of the ITC. Then we will have the ITC conditions for the availment. There are various eligibility conditions which we need to fulfill to avail the ITC. What are those conditions? Then blocked ITC. So basically it is a blocked ITC which we cannot avail. It's exactly not reversal, but it's a blocked ITC which one cannot avail. And that what are these blocked ITC? And at last we will have the reversal. After availing, there are some ITC need to be reversed. So which are these reversals required for RTC? So this is our today's content. And let's start with the concept of input tax credit, right? I presume that all of you must be having some basic idea about the input tax credit and about the GST. Because if you want to know or understand the GST, I can say the input tax credit is one of the most important pillar of the GST, and without understanding the concept of ITC, one cannot understand the concept of GST itself. So let's begin with the concept of input tax credit. What is input tax credit, right? In GST law, everything has been defined. Input tax has also been defined. What is input tax? And then we will understand what is input tax credit. So first of all, the Act defines the input tax. What is input tax, right? Input tax means, just a minute. Input tax means IGST, including that on import of goods, CGST, SGST, and UTGST charged on any supply of goods or services, and includes. So basically, input tax means any of the tax, CSI, and union territory tax. So we all know that there are this type of taxes: CGST, SGST, either SGST or UTGST, and IGST. So all this tax means input tax charged on the supply of goods or services, right? And it also includes tax paid on reverse charge, whether it is paid on reverse charge under section 9 of the CGST Act, whether it is paid on the under section 5 of the IGST Act, 9 of the SGST Act, or 7 of the UTGST Act. Any tax paid on the reverse charge is also an input tax, right? But excludes the tax paid under the section 10, that is composition levy. You must be knowing that there are composition persons who are registered as a composition person, and they don't charge any tax on the invoices, but they pay lump sum amount of the tax to the government. So any tax paid by the composition person to the government, the recipient of the goods cannot avail the credit of the same, or whether that composition tax will not qualify as a input tax as per the definition. So these are the basically input tax. What it want to say is all type of GST it will cover, charged on the goods or services procured by me. So I procure any goods or services, any tax charge on that, including the tax on RCM, will be defined as an input tax, right? And input tax credit, very simple. Input tax credit means credit of input tax. So these are the very basic concepts. But when you want to understand the concept of the ITC or GST, you need to start from the basic, right? Even though you have so much knowledge of the GST or you have considerable good knowledge of the GST, but when you want to go something basic, start with the basic, because it will definitely help you in understanding the various practical issues, right? One of the practical issues I can discuss here with is regarding the transitional credit, right? All of you must be knowing that at the time of the transition from the old tax regime to the GST tax regime, the assessee can avail the transitional credit of various aspects. We will not go into the detail of that. Transitional credit can be availed of any unutilized credit in my old returns and other so many credits, right? So now I have availed the transitional credit, right? And department says that the transitional credit was wrong availment. I cannot avail the transitional credit, right? And they want to issue so-cause notice or they want to make recovery of the same, right? Now the issue will arise. The Act provides power for the recovery of wrongly availed input tax. But if you closely see the definition of input tax, transitional credit will not get covered in this definition, right? Because transitional credit was credit under the earlier laws and it cannot be said to be credit under the CS or IGST Act. So transitional credit will go out of the term input tax. And now the main question arises whether once the transitional credit is not input tax, whether the department can issue the notice for the recovery of the same if I have availed wrongly the transitional credit. So I just want to highlight is that once you go to the basic definition of anything, you will have many ideas, you will have many resolution for your practical queries. So always try to understand or try to read definition and bare act whenever you have any query. So this we have understand the definition of input tax and input tax credit. Now let's move to forward. There are three important definitions or term for the purpose of input tax credit. And these are the three important terms are input services and capital goods, right? So we must be knowing because these three terms were also there in the previous act, I-700 credit rules there also. These are the three terms input service, capital goods were there, right? So to understand these three terms, first one need to understand what is the goods and what is the services. I will not go into the detail what is the goods and what is the services, but goods means anything movable property other than money and securities and include so and so. Definition has been given. And services mainly anything other than goods and other than money and securities, right? So this way the goods and services has been defined in the GST Act. And so input means any goods other than capital goods used or intended to be used by supplier in the course or furtherance of business. So input means any goods, I utilize any goods in my course or furtherance of business, it becomes input goods other than the capital goods. So it should not have been capital goods. Then any goods will become inputs, right? So basic example, if I am engaged in the trading of say iron and steel, so I purchase the iron and steel and sell the iron and steel. So that purchase, that is goods. The purchase of goods will be input for me. Even I use stationery, papers for my office. Papers is the goods, right? And it will be classified because it is used in the course or furtherance of business. It will be classified as an input for me, right? Now, similarly, input services. Input services means any services used or intend to be used by a supplier in the course or furtherance of business. So it's matching definition with the inputs. Here the word is input service. So any services used or intend to be used in the course or furtherance of business will be classified or will be eligible as a input services. Same again, even any kind of services, I use any chartered accountant services, any legal services, any courier services, telephone services for the course or furtherance of my business, it will be classified as a input services, right? And third term, capital goods. It means goods, the value of which is capitalized in the books of account of the person claiming the input tax credit and which are used or intended to be used in the course or furtherance of business. So here in this definition of capital goods, the weightage is on the word which is capitalized in the books of account. So if any of you know whether what was the defined as a capital goods in the earlier Senware credit rules, they have specifically identified certain chapter headings, certain kinds of goods. This plant and machinery or these things will be classified as a capital goods, and only those items will be classified as a capital goods. But here in GST there is a vast difference. What they have stated is anything which is capitalized in books of account. So if any goods I capitalize in my balance sheet, it will be considered as a capital goods. All other goods will be considered as a input, right? So simple air conditioner I purchase for my office and I capitalize in my balance sheet, then the air conditioner will be capital goods for me. But for the dealer of the air conditioner who purchases and sells the air conditioner will be regarded as a input for him, right? So this is the basic difference, and one need to keep in mind this basic difference. Now, after understanding these three important terms, let's have a look at some features of the input tax credit. It's a seamless credit, right? There is a very big question on this, whether the seamless credit is a myth or reality. And you will be able to understand and give answer whether this input tax credit, seamless credit, concept of seamless credit is a myth or actually a reality, right? Definitely we will be able to understand how many issues are there in seamless credit, and we will try to identify whether it is a myth or reality, right? If we say input tax credit is one of the most important objective of bringing the GST. Why the GST was brought? We have earlier tax system, VAT, service tax, central excise, and so many other indirect taxes, right? Then why the GST has been brought? So one can say one of the important and most important objective, which is even been part of the Constitution of India also, that to have the seamless credit, right? Earlier in the earlier laws, what was happening? I cannot utilize credit of service tax or excise in VAT. I cannot utilize credit of VAT in the excise or service tax. Cross credit was not available. Now in this case, everything is GST and seamless credit is available. So it was the main objective of bringing the GST. Definitely there are certain restrictions, there are blockages which we will discuss in the later slides, but more or less there is a seamless credit, and it was the main objective of bringing GST. Then credit on intrastate supplies. In GST there is no difference between intrastate supplies and interstate supply. For availing the GST, credit are available on both type of supplies, which was not the case in the case of earlier regime, right? You cannot have the credit of interstate like CST. It was levied at earlier, CST was levied on interstate supplies, but one cannot avail the credit of the CST, right? Full credit of the capital goods in the first year only. If you see the Senware rules, central excise or service tax, right? There was limitations, or one can say restriction. For the capital goods credit, I can avail the 50% in the first year, and remaining 50% I can avail in the next year. So I cannot avail full credit in the first year itself in the excise or service tax. And under the VAT, there were different rules for different states. But in GST, there is no such restriction. I can avail full credit on the capital goods in the first year itself or on the receipt of the goods itself, right? And interhead adjustment possible. This is very basic, but just to highlight that we all know that interhead adjustment of IGST and CGST, SGST is possible. Just take an overview. IGST credit can be adjusted against the liability of any tax, IGST, CGST, or SGST. Credit of CGST can be utilized against the liability of CGST and IGST, but not against the SGST liability. Similarly, credit of SGST can be utilized against the liability of IGST and SGST, but not against the liability of CGST. This is very basic, and I hope all of you must be aware of the same. So this is the basic concept of the ITC. And after understanding or have an overview of this basic concept of the ITC, now let's move to the input tax credit conditions for availment, right? We have understand what is the input tax, what is the input tax credit. But whether I can avail all the credits, whether there are any restrictions, whether there are any conditions for availment of such credit, we will look into that, right? So what are the conditions for availment? So basically section 16 of the CGST or SGST Act governs the provisions relating to ITC. And I must at this time request all the students, in practical life, whenever you have any queries, right? I have seen most of the students nowadays directly Google the queries. If I have any doubt or I have any query, I will Google it. No issue in Googling it. You may Google it. But after Googling it, once you get the reference of the section, please refer to that section, right? It is very important to understand the bare provisions, bare act, right? If you don't know which is the section which governs the input tax credit, you can Google it. You will get the idea that section 16 governs the input tax credit. Then please go and try to understand what the bare provision says, what is the section 16 provides. It will definitely help you in understanding any of the concept, right? I am not against making Googling of anything. You can do it, but always then try to go to the bare provisions also, right? Now let's look at the ITC conditions for availment. Every registered person shall, subject to such condition and restriction as may be prescribed, be entitled to take the credit of input tax charged on any supply of goods or services or both to him which are used or intended to be used in the course or furtherance of business. So basically this section 16.1 provides how I can avail the input tax credit. So what it says, any registered person, I need to be registered. Definitely then only I can take the credit. If I am not registered, definitely I will not be able to get credit. Any registered person, subject to conditions and restriction. Condition and restriction we will see in the next slides. Entitled to the tax credit of the tax charged, input tax charge on any supply of goods or services, on any goods or services I receive, right, which is intended or used or intended to be used in the course or furtherance of business. So ultimately any goods or services I receive, the goods or services, same should be used or intended to be used in course or furtherance of business. So here what is important is course or furtherance of the business. I have not covered here the definition of the business, very much wide definition of business. If you go to the definition of business in GST, it is very wide and you may refer in your free time, but almost everything is covered under the business, right? So if I receive any goods or services which are used or intended to be used in the course or furtherance of business, I will be eligible to get credit of such tax, right? Now section 16.2 provides certain conditions. These are the basic conditions for availing ITC. Which are these conditions? Let us see. The person is in possession of the tax invoice or debit note or any other tax paying document as may be prescribed, right? So I should be having any tax invoice or debit note or any other tax paying document specified for any specific cases, right? So basic condition is I should have the tax invoices reflecting this value of the goods, CGST, SGST or IGST charge on so and so and total amount so and so, right? So basically that tax invoice, I should have that tax invoice with me for availment of the ITC, right? Then person has received the goods or services or more. I must have received that goods or services for the purpose of my business. Then only I can avail that ITC or input tax, right? If any goods has not been received by me, by whatever the reasons, I will not be eligible for the credit of the same, right? Similarly, for any services, if I have not received, then I will not be eligible for credit on the same, right? Then third condition is tax payable on such transactions has been paid to the government either by way of cash or credit, right? So I have purchased goods worth rupees 1,000, 180 IGST or C or SGST charge on that, right? I am eligible for credit of 180 rupees on that, ITC of 180 rupees. But one of the important condition is that my supplier should have been paid the tax to the government. right? So one can say this is whether these conditions, why they are imposing the burden on me to check whether my supplier has paid the tax or not, right? Whether government can put such burden on the registered person or not is a separate question. There are so many litigation on this issue, right? In previous regime also, in GST also going on so many litigation. But if you refer to the provisions of the Act, if you refer to the GST Act puts condition that only and only after my suppliers pays the tax to the government by credit or cash, then only I am eligible to avail the credit. So this is one of the important conditions, right? You all must be knowing that there is at present there are various issues of comparing credit with the two-way ITC with the two-way, whether two-way ITC is reflecting in two-way or not, then only I can get credit. There is a separate issue we will discuss at the end if time permits about the ITC matching with the two-way, right? But whether two-way is as per the Act or not, Act provides for any provisions for matching with the two-way or not is a separate issue, but definitely Act provides that suppliers should pay the tax to the government. This is the one of the basic conditions for availment of ITC. Right. And the last condition is the person has filed the return under section 39. 39 return means now earlier it was GSTR 3, but then government has amended that CB will also be written under 39. So the person should have been filed the GST return, that is GSTR 3B, then only he can avail the ITC. So these are the basic condition. One must keep in mind all these conditions in any case, any kind of invoices, any kind of transactions. When you want to decide whether the credit will be available or not, first you need to look at these four conditions. If these four conditions are satisfied, then only you can move forward for other aspects, right? So these are the basic four conditions for availment of the ITC. These four conditions were prescribed under the section 62. Then there are some other conditions in provided by way of provisos to the section 16 or some other subsections, right? Which are these conditions? First is if the recipient fails to make the payment to the supplier within 180 days of the invoices, then ITC shall be reversed along with the interest applicable to loan. So take very basic example. I am a trader. I have purchased goods of 1 lakh rupees, right? And on this goods of 1 lakh rupees, I have availed ITC of 18,000, say for example. I have also sold those goods. I have paid out to tax. That is separate issue. Now I have purchased from Mr. A goods of 1 lakh and 18,000 GST. So I am supposed to pay 1 lakh 18,000 to Mr. A, right? I have not paid this 1 lakh 18,000 to Mr. A within 180 days of the invoices. So I have received invoice on 1st January and say for example, after 180 days, I have not made the payment, right? Whatever is the reason, whether my credit terms is more than 6 months or I have liquidity issues or whatever the reason, I have not paid to my supplier value as well as tax. Then GST Act says I need to reverse the credit of 18,000 because I have not paid rupees amount to the Mr. A. The ITC availed on invoices of Mr. A of rupees 18,000. I need to reverse the same with the interest applicable thereon, right? Many of us or most of the assessees don't follow this rule, right? Even many of assessees don't know about the rule, but these provisions have been provided in the Act, and one need to follow this, right? Yes, definitely. Once you make the payment to the supplier, you can again reclaim the credit. Say for example, I have not paid to Mr. A, that's why I have to reverse the credit. But after next 3-4 months, that is after 9 months of the date of invoice, I have made the payment to the supplier, full payment to the supplier. Then again I can reclaim my credit of 18,000 in that month. So there is no issue in reclaiming of the credit, but I can reclaim the credit once I make the payment to the supplier. Then again, another condition is that if the recipient has claimed the depreciation on tax component of the cost of the capital goods, then credit of such tax component shall not be allowed, right? So it is regarding the capital goods. I have purchased the plant and machinery worth rupees 10 lakh, say for example. Now that plant and machinery value is 10 lakh, tax is 1 lakh 80,000. So I have paid in total 11 lakh 80,000, right? So what will happen? I will take the credit of 1 lakh 80,000 of the GST, and also I will claim the depreciation in my books of account or in income tax, right? So what this provision says, one should not claim the depreciation on the tax component of that assets, right? So if I have purchased the assets in 10 lakh value plus 1 lakh 80,000 tax, I cannot claim the depreciation on 1 lakh 80,000. That tax component, I cannot claim the depreciation. Definitely, I can claim the depreciation on basic value of 10 lakhs, right? So here there are some confusion, or many persons have doubt that I cannot claim depreciation at all on the fixed asset. If I claim the depreciation, I cannot get the credit. It is not correct. You cannot claim the depreciation on only on tax component. Basic value, you can definitely claim the depreciation. So in our example, 10 lakh basic value, 1 lakh 80,000, 1 lakh 80,000 I will claim as a credit in GST, and on basic value of 10 lakh, which will be capitalized in my books of accounts, and I will claim depreciation on that 10 lakh, right? Then the input tax credit cannot be availed on any invoices after the due date of GST return of the month of September of the next year, or date of filing of annual return, whichever is earlier. So here the question is, up to what time I can take the credit, input tax credit, right? I have received the invoice in the month of February 2021. I have accounted for in the month of February 2021, but I forget to take the credit in the return of February. February 3B, I have not taken the credit. Now, up to which period, up to what time I can avail that ITC? It is an issue. So Act provides the limitations that up to the month of the September of the next year. So invoices pertaining to 2021, then September of the next year, that is September 2021, filing of the GST return of the September 2021, I can avail the ITC in that return, right? Or filing of the annual return, whichever is earlier. At present, annual returns are normally filed after the September of the next year only, because the annual return has been delayed. But if by chance I file the annual return before the September of the next year, then either the date of the filing of the annual return or due date of the filing of the return of September, whichever is earlier, I can avail the ITC. So basically, you can understand invoices dated 1/4/20, 1st April 2020. I have time of 18 months to avail the ITC, right? Because 1/4/20, so it is pertaining to 2021, and I can avail up to September 21. So I have 18 months time period. And similarly, invoice dated 31st March 2021, right? So invoice dated 31st March 2021. Again, I can avail up to September 21 only. So for that invoice, I have time limit of 6 months for availing the ITC. So I have time limit from 6 months to 18 months, depending on the date of the invoice for availment of the ITC. Right? So these are the some other conditions of the section 16. Now, this is the basic of the ITC. We have discussed basic concept of the ITC, basic conditions and provisions regarding the ITC under the section 16. Right? If you have any doubt, you can definitely put the queries in the chat box, and we will definitely discuss at last, right? So now what we have discussed is input tax. We determined that there is an input tax. We are eligible for input tax credit as per section 16, right? So we can avail the ITC. So whether we can avail all the ITC which are eligible as per 16, or there are certain restrictions. So now one of the such restriction is blocked credit under section 17(5), right? Section 17(5) specifically provides various items or various lists that is specifically blocked under the GST Act. Though I have purchased the goods or services, I am eligible to avail the ITC. My ITC is reflecting I have made payment. I am eligible as per section 16. Then also, if it falls within the section 17(5), then I will not be able to take the credit. That credit will be considered as a blocked credit, and I will not be eligible to take any credit of any such item, right? So which are these blocked credit? let's start with first motor vehicle, right? Motor vehicles for transportation of goods or transportation of persons. Just a minute. So first of the block credit is motor vehicles. I cannot avail the credit of the motor vehicles, right? But there are certain criteria for which motor vehicle I cannot get credit and for which motor vehicle I can get credit. So first, motor vehicles for transportation of goods or transportation of persons, if approved sitting capacity is more than 13 persons, then credit is allowable. I can get the credit of this. So any motor vehicles for transportation of goods like trucks or any other vehicles used for transportation of goods, I will be eligible for credit. Or even any passenger vehicles which have seating capacity, registered seating capacity of more than 13 persons, then also I will be eligible for credit. So if I purchase any bus or any minibus or some other vehicles for my business, then I will be eligible to get credit of that bus, even though it is a passenger vehicle, right? So now what, for which vehicle credit will not be allowed? Motor vehicles for transportation of persons, if approved sitting capacity is not more than 30 persons, credit not allowable. So any motor vehicle which is for the transportation of persons and which has the seating capacity not more than 13 persons. So any kind of our four-wheeler, all type of our cars, four-wheelers will be covered over here, and credit of the same will not be available. So one need to be clear, very much clear on this aspect, that I cannot avail the credit of the cars, even though it is purchased for the purpose of the business, even though payment has been made from my business account, and even it is utilized for transportation of my employees or utilized for business purpose only, then also I cannot take the credit of the motor vehicles. One of the important question comes here is whether two-wheeler is the motor vehicle or not, right? So if you go, the motor vehicle has not been defined anywhere in the GST Act. But if you refer to the motor vehicle definitions in the provisions related to Motor Vehicle Act, then motor vehicle is any vehicle having capacity of more than 45 cc, right? So most of the two-wheelers are having capacity of more than 45 cc, and therefore such motor vehicle, such two-wheelers will also be classified under the motor vehicles, and input tax credit of this two-wheeler or four-wheeler will not be available to any kind of businesses, right? So this is very much clear. Now there are exceptions to this rule. However, the credit will be allowed if motor vehicle is used for any of the following taxable supplies. So these three supplies, I can still take the credit of the motor vehicles, right? And which are these three supplies? Further supplies of such motor vehicles. So I am a dealer engaged in the motor vehicles. I purchase and sell the motor vehicle, right? I am a car dealer, so I will get the credit. Transportation of these passengers. I have business of the transportation of these passengers, right? I am in the travels business or in the business of the transportation of passengers. Then also I will get the credit of the motor vehicle. And last one, imparting training or driving of such motor vehicles. So I have driving school or I have training school for imparting the driving skill on such motor vehicles. Then I will be eligible for availing the ITC of the motor vehicle. So in these three cases only, ITC of the motor vehicles will be available. Otherwise, ITC of motor vehicles specifically below the capacity of the 13 persons will not be eligible. So in case of any practical cases, in any cases, if you see any person has purchased the new car in his books of account, it is reflecting as a new car purchase, then you must check that whether ITC has not been availed. If ITC has been availed wrongly, then it needs to be reversed, right? Likewise, motor vehicles, vessels and aircrafts, right? So I cannot avail the credit of vessels and aircrafts. Credit not allowable on vessels and aircraft similar to motor vehicle, except for the following cases. So here also these are the exception in which case I can avail the credit of the motor vehicle, vessels or aircraft. What is the? These are exception. First, for making the following taxable supplies, namely further supply of such vessels or similar to motor vehicle, transportation of passengers. If I have engaged in I am a business of airlines or shipping company who are transporting the passengers, then I can avail the credit of the vessels or aircrafts. Then imparting training on navigating such vessels or imparting training on flying such aircraft. So I am providing training for vessels or aircrafts, then also I can get the credit. So these four types I can get the credit. And again, the second thing is for transportation of goods. If I am utilizing my vessels or aircrafts only for transportation of goods, then I can avail the ITC on the same. So even for my business, I have purchased small vessel for transportation of goods from one place to another. Then I can take the credit of that vessel because it is for transportation of goods, right? But if it is not for transportation of goods, it's for some other purpose, then I cannot avail the credit. Many of the big corporates have their own chartered flights, right? For transportation of their key employees or some higher level employees, right? So these such big corporates cannot avail the ITC on aircraft because it is specifically debarred over here. Then service is in relation to the motor vehicles or vessels or aircrafts, right? Basically, in this definition, there was a change by the Amendment Act 2018. Earlier, the credit relating to services were allowed, but then they have amended the section 17.5. And now at present, even the services in relation to the motor vehicles or vessels or aircraft is also not allowed. Which are these services? Right? Services of general insurance, servicing of the car or vessels or aircraft, repairs and maintenance insofar as they are related to motor vehicle, vessels or aircraft. It will not be allowed as a ITC, except, again here there are some exception. First exception is specified in case of motor vehicles and vessels or aircraft. So whatever exception provided to motor vehicles, same exception also applies over here. And another additional two exceptions have been provided over here. First, manufacturing of such motor vehicles, aircrafts or vessels, or supply of general insurance services. If I am in the business of the supplying of general insurance services, then I can avail the ITC of the general insurance, otherwise not. And if I am in manufacturing of the motor vehicles, then I can avail the ITC on the services of the insurance and servicing and repairs and maintenance. So from the practical point of view, from our day-to-day practice point of view, we need to keep in mind that any ITC on services, service charge of the car, right, or any insurance of the car, or any repairs and maintenance services of the car will not be eligible. So if any business there is expenses on such expenses, repairs and maintenance or services or insurance of the cars, and they have availed the ITC, such ITC is not available and that need to be reversed, right? And one need to keep in mind one thing over here. Here the word is services, only services, right? So what if I purchase tires for my car, right? It will still not fall over here, and in my opinion, I can still get the credit of such tire because it is nowhere specifically debarred. Now, another list of the block credits under section 17.5. Supply of goods or services or both of following categories. There are categories which are specifically debarred, and you will not get ITC on such goods or services. First, food and beverages. You will not get credit of food and beverages, right? So any of the restaurant invoices, if you have paid the tax to the restaurant, you will not be eligible to get ITC on such restaurant bills. Then outdoor catering. You are utilizing any outdoor catering services, even for your business, even for your employees, right? But still you will not get ITC because it is specifically debarred. Beauty treatment. There is no ITC available on beauty treatment. Even any person who has claimed as a business expenditure beauty treatment, but then still also ITC will not be available. Health services, any kind of health services, if I pay GST on the health services, it will not be eligible as ITC. Then cosmetic and plastic surgery, I will not get any kind of credit on any GST paid on cosmetic and plastic surgery. Leasing, renting, or hiring of motor vehicles, aircraft, or vessels, except for the specified purpose, right? So here, this is important category. leasing, renting, or hiring of motor vehicles. So if for my business purpose I hire a taxi or I get services of rent a cab, right? I will pay GST on it, but still I will not be eligible for availment of ITC on such transaction, right? So even in the case of rent a cab, now there is a reverse charge in some of the cases. Even though I paid the tax on reverse charge basis, still I will not be eligible to claim that credit, and it will be my expenditure. So this is one of the important things we need to keep in mind while we are verifying the books of accounts of any SSC, right? Then these are the items on which ITC will not be available, but there are exception over here also. Okay. Credit of these items will be available in which cases, except when the same is used for making an outward taxable supply of the same category of goods or services, or both, or as an element of taxable composite or mixed supply, right? So I am providing outdoor catering services. My business is providing outdoor catering services, and in turn, I get outdoor catering services from some another person. Then I will be eligible for that outdoor catering services credit. So I am in the same business, and that's why I am paying to someone. Then I may be eligible for the. I will be eligible for the category ITC, right? And another important thing is that output is a element of a taxable composite or mixed supply, right? So I am a hotel. I am running a convention, right, in my hotel. And there is a conference over there, right? So I am providing composite supply to my customers of conference hall, food, various things, right? And for that food, I have availed the procured the outdoor catering services from someone else, right? So here also outdoor catering is a part of my outward supply, right? That's why I will be eligible for outdoor catering services in this case also. So basically, these are the credits which will not be eligible, but in specific cases where my outward supplies of the same category or the category in which this service is a part of that services, then I will be eligible for the ITC. Otherwise, I will not be eligible for this kind of any ITC. Now, membership of club, health and fitness center. I have availed the membership of any club or fitness center or health club, right? And I have paid the expenses from my business. I have claimed as a business expenditure. Then also I will not be eligible for ITC on that part because ITC has been specifically blocked, right? And last one, travel benefits extended to employees such as leave or home travel concession, right? So any travel benefits given to the employees, I will not be eligible for ITC on such travel concession benefits, right? So hope I am, you all must be clear. These are the specific items on which credit will not be available. Still, there is many things in this list of the block credits. One of the most important thing is construction related activities in which ITC will not be available, right? So which are such activities? Construction of immovable property other than plant and machinery, right? So if I construct any kind of immovable property, I will not be eligible for the ITC. And in that case also they have specifically given two categories. Works contract services, except where it is an input service for further suppliers of works contract services. So what is works contract services? You all must be aware that any services in which I provide goods as well as service as an element of the services, then it will be regarded as a works contract services. Say for example, I have given services of construction of factory building. One of the business need to construct the factory building, and I have given the works contract services for the construction of the factory building, right? Then the credit of that works contract services will not be eligible credit. Works contract services credit will be eligible credit only and only when my output is also works contract services. So if I am a contractor providing works contract services to someone else, and I procure the works contract services from my subcontractor, then in that case I will be eligible for the ITC of the works contract services. In all other cases, I will not be eligible for the works contract services. So this is works contract. I have given entire contract for the construction of my factory to someone else. Now, say for example, I have constructed my factory building on my own. I have purchased the cement, steel, and I have engaged some laborers, and then I have get constructed my factory building. So it is not works contract services, but any goods or services received by a taxable person for construction of an immovable property on his own account, even when used in the course of furtherance of business, the credit will not be eligible. Right? So this is a very big blow for any business, is because if I start the business and I construct the factory, I invest 3 crore, 5 crore, 10 crores in the construction of the factory building, right? I will not be eligible for ITC on such construction of factory building. So it is very important we keep in mind that ITC will not be available on construction related activities, right? And they have also defined what construction includes. Construction includes reconstruction, renovation, additions or alterations or repairs, even repairs, to the extent of capitalization to the said immovable property. So here what is important is capitalization or to the said immovable property, right? So construction includes everything: reconstruction, repairs, renovation, addition, alteration, everything, right? But important what is capitalization. So if I incur any expenditure on any kind of renovation, addition, alteration, which is capitalized in my books of accounts, then I will not be eligible for credit. But I have incurred certain repair expenditure for immovable property, which is in revenue nature, and I have debited to the profit and loss account, then I will be eligible for ITC on such repairs and maintenance expenses. So what is the criteria, or what is the important thing for availment of ITC on these construction activities? Capitalization in the books of accounts. For any capitalization, I will not be eligible for ITC. If such expense or such item is not capitalized in books of account, then I will be eligible for input tax credit. So this is all about construction related activities. Then some of the other items apart from the construction related activities: goods or services or both in which tax has been paid under section 10, right? So same again, I have paid the tax under section 10, that is composition tax. So I have paid tax to the composition dealer, right? So that composition tax will not be eligible as a credit, definitely. Goods or services or both received by a non-resident taxable person, except on goods imported by him. So we all know that there is a specific category of non-resident taxable person. If that non-resident taxable person gets registration in India for any specific work, that non-resident taxable person will not get any kind of input tax credit except the goods imported by him for providing outward supply, right? Then goods or services or both used for personal consumption, right? If I have paid any amount towards any kind of goods or services which is for my personal consumption, then I will not be eligible for ITC. Say for example, I have my office and I have purchased air conditioner and installed in my office, then it is for the purpose of business. I will be eligible for the ITC. But if I have purchased the air conditioner, I have made payment from my business account, but that air conditioner has been installed at my home, right? Then it is for personal consumption and ITC will not be eligible. And this is very important: goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples, ITC will not be available. So say for example, I have purchased, I am say for example dealer in the medicines or some other items, right, in which I give free samples to my customers, right? So that whatever free samples has been distributed to my customers, the ITC on proportion to that free samples, procurement of that free samples will not be eligible, will not be available to me, because I have not charged anything for outward supply. I have not paid tax on outward supply, so I will not get the credit on input supplies or inward supply, right? So all kind of these goods lost, stolen, destroyed, or written off or disposed of, I will not be get ITC because I have not paid the tax on outward supplies. There is no outward supplies. right? Goods have been either stolen or destroyed, whatever the reason. So I will not be eligible to get the credit. If I have availed the credit at the time of purchase of the goods, I need to reverse the same, and I am not eligible for ITC on such kind of transactions, right? And any tax paid in accordance with the provisions of section 74, 129 or 130. So if my supplier has paid the tax under any notices under this 74, 129 and 130, 74 is mainly any kind of suppose notice for any demand. 129, 130 is relating to e-way bill non-compliance, right? So at present, there are many cases in which goods have been intercepted by the government authorities, right? And there was a non-compliance of the e-way bill. E-way bill, I think you have understood what is the e-way bill yesterday by the Darshan. If you don't have the e-way bill and there is a non-compliance, then government will raise the demand on you, and supplier has paid that demand, right? Now, once the supplier has paid that demand, supplier cannot pass on that GST to the recipient, and recipient cannot avail that ITC, right? So, be very much clear that if my goods has been intercepted by the department, I am supposed to pay 100 rupees of tax with 100 rupees of penalty. I have paid 100 rupees tax and penalty 100 rupees. Now that 100 rupees I cannot pass on to the customer, because customer will not be eligible to ITC. At present, many people are doing such passing of the GST portion to the customer, but it may create issues because the recipient is not eligible for the ITC on such payment, right? So these are the block credits, right? Now let's move to some of the reversal of the credit. I hope we have cleared what are the block credits, right? First, we have understood input tax credit, which are the conditions for the availment of the input tax credit. If I am eligible, then there are specifically block credits, various items of the block credits we have just seen. For those block credits, I will not be eligible for ITC. And now reversal of input tax credit. In specific cases, I need to reverse my input tax credit. Even I have first availed the input tax credit, but then later on, based on certain criteria, I need to reverse that input tax credit, right? So which are these reversal of input tax credit? Let's go to the same. Just a minute. So basically section 17 and corresponding rule 42 and 43 provides for the reversal of ITC in certain cases, right? So one need to keep in mind, if I need to refer to the bare provisions, then I need to go to the section 17 and specifically section 17.1, 17.2 and 17.3 and rules 42 and 43, right? So first of all, let's understand what is the section 17, right? I have given here section 17 subsection 1, subsection 2 and subsection 3. These three are the important from the perspective of the reversal of input tax credit, right? First, where the goods or services or both are used by the registered person partly for the purpose of any business and partly for the other purposes, the amount of credit shall be restricted to so much of the input tax is attributable to the purposes of his business. So basically, this subsection 1 says that when I have procured any goods or services, and that goods or services has been utilized partly for my business purposes and partly for any other purposes other than the business purposes, then I will be eligible for ITC only to the proportions of the goods or services utilized for the business purpose, right? Let's take a very basic example. Say, for example, I am chartered accountant. I have office and residence in one building only, right? And I have lift in my premises. So there is a repairs and maintenance activity of the lift. I pay to the agency repairs and maintenance charges for the lift, right? And on that repairs and maintenance charges, I pay GST also. So whether I will be eligible to take ITC of that GST or not, right? So here it will fall under the section 17(1), that services of the repairs and maintenance has been utilized partly for the business purpose as well as partly for the other purpose. So here there will be restriction on availment of the ITC, and I will not be eligible for full ITC, but there will be some restriction on the ITC. Now, how that restriction will work, how much credit I will get, how much I will not get, that working or that formula has been given under the Rule 42 and Rule 43, which we will see after this slide, right? Now, let's see the section 17(2). Section 17(2) says, where the goods or services or both are used by the registered person, partly for effecting taxable supplies, including zero-rated supplies under this Act or under the IGST Act, and partly for effecting exempt supplies under the said Acts, the amount of credit shall be restricted to the sum much of the ITC attributable to said taxable supplies, including zero-rated supplies. So here what it says, I am providing both kind of outward supplies, taxable outward supplies as well as exempt outward supplies, right? So I am trader. I am dealing in two products, product A and product B, right? So product A is a taxable product and product B is an exempt product. Now my turnover includes both sale of A and sale of B also. So here my case will fall under this section 17(2). Goods or services have been utilized for partly for the taxable supplies and partly for the exempt supplies. Then also I will not be eligible for full credit. My credit will be restricted to certain extent. How much restriction will be there? It will be under the Rule 42 or 43, right? But here one need to understand two important aspects. Taxable supplies including zero-rated supplies, right? So what is the zero-rated supplies? You all must be aware that zero-rated supplies means export or SEZ, supply to SEZ unit, right? So this zero-rated supplies is also considered as a taxable supplies, even though I may make export without payment or with payment. In both these cases, export or zero-rated supply will be considered as a taxable supplies and it will not form part of the exempt supply. So one need to be clear in this, that taxable supply includes the zero-rated supply, right? And here the importance is on the exempt supply, right? So what is the exempt supply? It is very important to understand the concept of the exempt supply, right? And if you go to the section 17(3), it says the value of exempt supply under subsection 2 shall be such as may be prescribed and shall include supplies on which recipient is liable to pay tax on reverse charge basis, transactions in securities, sale of land and sale of building, right? So basically what subsection 3 says, exempt supplies as may be prescribed. So in definition section, exempt supplies has been defined, right? What is definition we will just see in the next slide, but exempt supplies is defined in the Act, plus for purpose of this section 70, specifically only for the section 17 purpose, these three activities: transactions in securities, sale of land and building, and transaction on which tax is payable on RCM basis will also be considered as a exempt supplies. So it will be regarded as a exempted turnover for the purpose of this reversal under section 17, right? So now let's see the definition of the exempt supply. Exempt supply means supply of any goods or services which attracts nil rate of tax or which may be wholly exempt from the tax under section 11 or under section 6 of the IGST and includes non-taxable supply. So here important is includes non-taxable supply. So basically any of the goods on which rate of GST is zero, right, nil rate, it is exempt supply. Any of the services which is exempted by specifically exemption notification, it is also exempt supply, right? And any non-taxable supply, it is also exempt supply. Non-taxable supply has also been defined that any supply of goods or services or both which is not leviable to tax under this Act. So any item which is not even leviable to tax under this Act, it is non-taxable applicable. Even then it will be supply will be considered as exempt supplies, right? And here I have summarized that for the purpose of this section 17 and specifically rule 42, rule 43, what will be the exempt supply, right? So this is very important. One need to keep in mind that for specifically for only this section, section 17, exempt supply means exempt supplies as defined under section 247, just we have seen, and includes, so it includes transactions in securities, transactions in land and building, and transactions which are liable to be tax to be paid on reverse charge basis, right? So these transactions, even though it is not exempt supplies as per the definition of the exempt supply, it will be specifically treated as exempt supply for the purpose of section 17, right? But excludes. Now these items are also excluded from the definition from the purpose of exempt supply. So which are these exclusion? Activities or transactions specified in schedule 3. There is a specifically schedule 3 in the GST in which there is a list of the transactions which are neither supply of goods nor supply of services, right? So any activities in the schedule 3 will not be considered as an exempt supply for this purpose of the reversal, right? The value of services by way of transportation of goods by vessel from the custom station in India to the place outside India. Basically, there is no GST on such services, but still it will not be considered an exempt supply for the purpose of the reversal of section 20. Sorry, section 17. And last, the value of services by assenting deposits, extending loans or advances, insofar as the consideration is represented by way of interest or discount. So basically, it want to say interest income. Some of you must not be knowing, so I just clear the interest is also an exempt supply. In the exemption notification, they have specifically mentioned that interest is an exempt services, right? So here they have excluded that interest, though it is an exempt supply, will not be regarded as an interest exempt supply for the purpose of the reversal of credit, right? I know it is difficult to understand in this virtual mode, basically the concept of exempt supply, but it is very much important for going further and for understanding the reversal under the rule 43 and rule 43 mechanism, right? So I just summarize saying exempt supply means exempt as per definition, includes these three activities and excludes these activities, right? This will be considered as an exempt supply for section 17 purpose. Now let's take some practical examples. When the section 17 will get attracted and we are supposed to make reversal of the ITC, right? So here take a case when the entire outward supply or majority of the outward supply is liable to tax on reverse charge basis, right? So I am a person, say for example, I am a GTA, goods transport agency, right? I am providing transportation services. Now I GTA, my whole entire services is liable under the RCM. Transportation charges is liable under the RCM. But apart from the GTA services, I have carried out certain other activities, certain maybe some sale of goods or certain some other service activities, which is liable to tax under the GST. So I have paid the tax on that. And I have RCM also. So RCM supplies is considered as the exempt supply as per our previous slide, right? So here in this case, section 17(2) will come into the picture and I will not be eligible for full ITC, but I need to reverse some part of the ITC and I can take some part of the ITC. Again, that working will be as per the rule 42 and 43, right? So second example is transaction in securities along with the normal business transaction. This is very common. If you verify any books of accounts of any businesses, even if it is a proprietary concern, partnership firm or companies, apart from the businesses, that business may invest in the shares and mutual funds, right? Some of may make trading in the shares and securities. Some of may make investment in the mutual funds. They have some idle funds. They may invest in the mutual funds, right? So basically, transaction in securities is out of the purview of the GST. But for the purpose of this ITC reversal, the transaction in that securities will be considered as an exempt supply, right? And again, I will go under the section 17.2 and I will not be eligible for full ITC, I need to make reversal of certain ITC, as my outward supply also includes transaction in securities, which is regarded as exempt supply for the purpose of the section 17. Right? Then another example is proprietor of the business having exempt supply in personal books of accounts, namely rent of residential property, transaction in securities, etc. Right? So I am a proprietary concern. My Messrs ABC is my proprietary concern, and I have also personal books of account. In Messrs ABC, I have taken the GST registration and I am discharging the GST on everything. Right? Now, apart from this proprietary concern books, in my personal books of account, I have given my residential property on rent. I am getting rent on my residential property. Now, rent on residential property is a exempt supply, right? And for the GST purpose, I am proprietor, so I am only single person. My proprietary concern is not a separate entity, so I am only single person. So even my personal books of accounts and my proprietary concern for the GST purpose both are the same. So if I am having any exempt income in my personal books of accounts, section 17 to come into the picture, may come into the picture, even though the reversal may be on very minimal part or may not be work out, but still I can fall under the section 17(2). Then sale of building or land during the year. Say for example, in this year I have sold my factory premises. I had my factory land and building situated at some place and I have sold it, right? My normal turnover is 10 crore and my sale of factory building during the year is 3 crore. So the 3 crore will be considered as an exempt supply. Even though my normal turnover, my outward supply is 10 crore, it is fully taxable, there is no exempt supply. But my sale of factory premises will be considered as exempt supply and ITC need to be reversed as per the rule 42-43. Right? This is also very common. Sale of the export license or any other such miscellaneous income which is exempt from tax. Right? Many times it happens that any kind of business, all the outward supplies are taxable. I am engaged in the export of certain products or trading of the certain products which is fully taxable. There is no exempt supplies. But I get the export benefits like MEIS license or certain other benefits which I sell afterwards. So sale of such export licenses is not liable to tax under the GST. So it will be exempt supply. So even though my item is fully taxable, it is entirely taxable, I have certain minor income exempt supply, and again section 17(2) will come into the picture and I need to work out a reversal as per rule 42-43. Then sale of one of the division of the businesses of the during the year. I have business. In my business, there are 3 divisions, right? 3 different kind of businesses. I have, say for example, forging units. I have also some stationery related units, right? So I sell one of my divisions during the year. Now that sale of division is also an exempt supply under the GST Act, right? Now if my entire output is taxable, but I have done transaction of sale of one of the division of the business, which will be considered as an exempt supply. And again, rule 17(2), section 17(2) will come into picture and need to reverse the ITC as per rule 42-43. Right? So these are the basic examples in which cases 17(2) will attract and I need to make reversal of ITC as per rule 42-43. Right? Now let's understand most important rule 42 and 43. Right? Why there are 2 rules? Let's have a look. Input tax credit which attracts the provisions of section 17(1) and 17(2), right, which is being partly used for the business and partly for other than business and partly for taxable and partly for exempt. In that case, I need to reverse the credit as per rule 42 and 43. So rule 42 is basically for input and input services, right? If I am supposed to reverse the credit of input and input services, then it will be worked out as per rule 42. If I need to reverse the credit of capital goods, then it will be worked out as per rule 43, right? So what we have understood in the beginning, the concept of input service and capital good, it is very important because on classification of input services and capital goods, you will be able to identify under which rule I am supposed to go, right? For input service, rule 42, and for capital goods, rule 43. One need to consider this. Now this important rule 42 formula for ITC reversal, right? Friends, frankly, if I speak, this formula is very complex formula. Similar formula was there in Senvet credit rules also, and even I frankly say that even many of the chartered accountants fail to understand this formula or fail to practically apply this formula, right? Still, we will try to understand this formula, and we are in the virtual mode, so we have some one more limitations, but still we'll try to understand this formula, and I will again cover this formula in different ways, 2 to 3 times, so we can understand the entire formula, right? So first is the rule 42 formula for the reversal of credit of the input or input services, right? Now what we have understood so far is that if my outward supply is taxable supply as well as exempt supply, right, then I may need to reverse my credit. I cannot avail the full credit, right? This is what we have understood. Now, how it will work out, this rule 42 says. So, let's understand each element of the rule 42. Total input tax credit will be denoted as a T, total tax credit. Might say, for example, this need to be done on monthly basis for each tax period, right? So, we are taking example of April 2021. For April 2021, my total tax credit will be denoted as a T. Now, amount of input tax used exclusively for the purpose other than business. There are certain credits which is used exclusively for other than business. So it is not used at all for the business purpose, right? Some ITC of some services which is purely used for my personal purpose, right? Not at all used for the business purpose. Like guys, our example of air conditioner installed at home, it is not at all used for the business purpose. So that will be considered as a T1. Basically, the ITC, full ITC of that will not be available. If anything is exclusively used for purpose other than business, no ITC or full ITC will not be available, right? Similarly, any input tax used exclusively for affecting exempt supplies. Now that ITC is exclusively used for exempt supplies, then no ITC, full ITC will not be available, right? Say for example, I am trading in the product A and product B. Product B is taxable, product B is exempt, right? I have taken certain services for transportation of product B on which I have paid GST, right? So that GST has been exclusively used for the exempt supply, right? So no ITC for that. It will be regarded as a T2, right? Then amount blocked under section 17.5. We have seen the list of the entire section 17.5 which are blocked under 17.5. That will be regarded as a T3, right? So basically this T1, T2, T3, all these three credits will not be available at all. So zero credit will be available for these three. So now what formula says? Formula says you find out the amount of input tax credit to be credited to the electronic credit ledger C1 equals to T minus T1 plus T2 to plus T3. So basically what it says, T means total credit. Out of the total credits, you deduct T1, T2, T3, right? So out of total credits, you deduct credit exclusively used for other than business, exclusively for exempt or block credit under 75. That we definitely will not get it. So T में से वो T1, T2, T3 निकाल देना है. जो बचेगा वो अपना एलिजिबल क्रेडिट फॉर दैट मंथ होगा जो हम 3B में लेंगे. ये T1, T2 और T3 जो क्रेडिट है वो हम 3B में अवेल भी नहीं करेंगे. That will not be a part of our 3B even, right? That will be directly ruled out. So now we will get C1. C1 means T में से जो टोटल क्रेडिट उसमें से ये तीनों क्रेडिट निकाल दो, right? Then amount of input tax used exclusively for effecting taxable supplies and zero rated supplies. So अभी आपके पास C1 आया था. That C1 is total your eligible credit which you will take in the 3B. Now जैसे exclusively used for exempt था. Similarly, certain credits will be which are the exclusively used for the taxable supplies, right? Say for example, in our case, product A and product B, product A is taxable, product B is exempt. So whenever I purchase the product A, on purchase of product A, also I will pay the GST and that will be my ITC. So that ITC is exclusively for taxable supplies. So that ITC will be fully available to me, right? So there will be no reduction from that ITC. So if, for example, I have purchased the product A of 1 lakh rupees and I have paid 18,000 ITC, that 18,000 will be fully available to me. There will be no reversal, no reduction from that 18,000. So again, out of C1, that exclusively used for taxable, including export, will be deducted. That T4 will be deducted. So we will get C2. C2 equals to C1 minus T4. जो हमने टोटल क्रेडिट थी अपनी टोटल क्रेडिट में से पहले जो भी एक्सक्लूसिवली फॉर एग्जाम्प्ट अदर देन बिजनेस तो वो सब निकाल दिया. फिर हमने क्या किया, फिर एक्सक्लूसिवली जो टैक्सेबल के लिए था वो भी निकाल दिया क्योंकि वो तो पूरा मिलेगा, उसमें कोई रिस्ट्रिक्शन नहीं है. अभी जो अपने पास क्रेडिट बचा C2, that C2 will be regarded as a common credit, right? So हमको common credit identify करना है every month, right? मैं अगेन एक बार रिपीट कर दूं, मेरा टोटल क्रेडिट है, टोटल क्रेडिट में से थोड़ा ऐसा क्रेडिट है जो मुझे बिल्कुल ही नहीं मिलेगा, विच इज एक्सक्लूसिवली फॉर एग्जाम्प्ट और अदर देन बिजनेस, वो पूरा नहीं मिलेगा, वो निकल जाएगा. फिर ऐसा क्रेडिट है जो एक्सक्लूसिवली फॉर टैक्सेबल, वो पूरा के पूरा मिलेगा, वो भी निकल जाएगा. और बाकी जो बचेगा दैट विल बी माय कॉमन क्रेडिट, एंड दिस रिवर्सल फॉर्मूला विल बी एप्लीकेबल ऑन कॉमन क्रेडिट ओनली. सो मुझे जो रिवर्सल करना है वो कॉमन क्रेडिट का ही करना है, दूसरे किसी चीज का नहीं करना है, राइट? अभी वो रिवर्सल में कैसे करूंगा, राइट? दैट क्रेडिट एट्रीब्यूटेबल टुवर्ड्स exempt supplies D1 equals to C2 into E divided by F. सो C2 मतलब क्या है, अपना कॉमन क्रेडिट है, into E divided by F. E मतलब है exempt supply, जो हमने exempt supply का डेफिनेशन सीखा, इंक्लूड क्या है, एक्सक्लूड क्या है सीखा, उसके हिसाब से वैल्यू ऑफ exempt supply will be identified. So into exempt E divided by F. F means total supply, right? So common credit से for example मेरा 1 लाख का आ रहा है, exempt supply मेरा 5 लाख का है, total supply मेरा 50 लाख का है. So out of 50 lakhs outward supply 5 lakhs is exempt, right? And my common credit is 1 lakh. So 1 lakh into 5 lakh divided by 50 lakhs. So 10,000 will be my credit reversal. So out of the common credit of 1 lakh, 10,000 is need to be reversed under Rule 42, right? I hope I am clear on this Rule 42. We are taking practical example is in next slide also, so don't worry about it. And last thing, this is all about, we have understood about taxable and exempt supplies, right? If there is exempt supply and taxable supply, we will go according to this formula. But what if there is a supply part which ITC which is partly used for business and partly for non business purpose? उस केस में क्या होगा, उस केस में क्योंकि नॉन बिजनेस पर्पस का आउटवर्ड सप्लाई का कोई वैल्यू नहीं होगा हमारे पास, देयर विल बी नो वैल्यू फॉर द नॉन बिजनेस पर्पस आउटवर्ड सप्लाई. सो व्हाट दे हैव डन इज दे हैव सेड you reduce 5% of the common credit. They have given ad hoc formula. If any of the ITC is utilized for the purpose other than business, then for that common credit 5% is need to be reversed under Rule 42. So if for example my 1 lakh is my common credit and some of the common credit has been utilized for the purpose other than business, then lump sum 5%, that is 5,000 will be reversed for that month, right? So this is about Rule 42 formula. Now what it's saying is remaining credit available for business purpose and taxable related supplies, right? C3 is to be computed separately for the CGST. So basically formula is over. Now what is saying is this formula we need to apply separately for the CGST, SGST, UTGST and IGST, right? Likewise our formula will be for each type of tax we need to find out. Again this formula we need to work out for each tax period. Tax period means month. At present we need to work out this formula for each month, right? And that each month figure will be the provisional figure, and at the end of the year you need to again find out for entire year, right? And if there is any shortfall or excess of the reversal, that reversal will be adjusted in the return of the next month. So basically, whatever, because what happens in 1 month, I have 10 lakhs of exempt supplies and 10 lakhs of taxable supplies. So both are equal, 50-50%. But in the next month, 1 crore taxable supply and only 1 lakh exempt supply. So ratio changes. It is only 1% exempt supply. So it may happen that figures of each month, ratio of each month may be different, and reversal may come out the different. So at the end of the year, again for entire year, April to March, I need to work out as per this rule 42, and that figure of entire year will be final. And if there is a shortfall or excess reversal, that adjustment will be made in the next month 3B. Right? Now let's take the example of the rule 42. So basically, this is the example of the rule 42. We have total input tax of input and input services of 500 rupees, right? I am a businessman. I have to say, for example, for April 2021, I have 500 rupees credit, total credit of 500 rupees, right? Which is denoted as a T. First column is what is the term used in the formula? T is 500 rupees. I have total credit of 500 rupees. Out of this 500 rupees, ITC exclusively used for purpose other than business is 100 rupees. Like in our old example, air conditioner used for the personal purpose, or any service is used exclusively for the personal purpose, right? Such ITC is 100 rupees. So definitely I will not get ITC for that. So that 100 will be known as a T1 and will be reduced from T. Then ITC exclusively used for exempt supply. Again, as per examples, I am selling the exempt product, but for the transportation of that exempt product, I have incurred transportation expense, and on transportation expense, I have paid the GST. So that ITC on transportation expense is exclusively for the supply of exempt supply. So I will not be eligible for that credit. So that 50 rupees credit is there, which is exclusively for exempt supplies. वो T2 से जाना जाएगा, then and that will also be reduced from T, right? Then T3 is ITC of block credits. Block credits हमने पूरा list देखा है, motor vehicles, food, beverages, construction. So that block credit is amounting to 25 rupees for April 21. So that 25 also I will not be eligible, and that will be regarded as a T3, and that will also be reduced from T, right? So here T1, T2 and T3 will be get reduced from the T. So total credit was 500 rupees. Out of the 500 rupees, 100, 50 and 25. These three, 175 will get reduced, and I will get eligible credit of 325, right? In the C1 portion, there is a T minus T1, T2, T3. So valid ITC in electronic ledger, credit ledger will be 325. So basically this 325 only we will take in our GSTR 3B, right? Now out of this 325, there is ITC exclusively used for taxable supply, right? So likewise in our example, two products A and B, A taxable, B exempt. So purchase of A is a fully taxable, and it is fully used for the sale of A, which is fully taxable. So I will get entire credit for the purchase of A, right? So ITC exclusively used for the taxable supply is 200. I will get entire credit for 200, right? So it will be also get reduced from the 325. T4, it will be regarded as a T4 and will get reduced. And so now I get common ITC. Common ITC will be 125, right? ये याद रखना है कि T4 में जो 200 रुपए की ITC है वो मुझे पूरी मिल रही है, वो तो पूरी मिल चुकी है, और T1, T2, T3 में जो है 100, 50 and 25 वो मुझे बिल्कुल ही नहीं मिलेगी, पूरी निकल चुकी है, राइट? सो अब ये सब लेस करके जो मुझे मिला वो है कॉमन ITC. मेरा कॉमन ITC हुआ 125, right? Now this common ITC, out of this common ITC I need to make reversal, and वो reversal कैसे होगा? exempt supply का proportion जो होगा total supply से, उसके proportion के basis पे reversal होगा. So that E and F we have discussed as 2000 is my value of exempt supply and 5000 is my aggregate turnover, right? So 125 into 2000 divided by 5000, right? So here the exempt supply is 40% of the total supply. So my common ITC into, say, you can say 40%, that is 125 into 40%, 50 rupees, right? So 50 rupees is value of ITC for exempt supply from common ITC. तो ये 50 रुपए का ITC जो है out of 125 common ITC, 50 रुपए का जो ITC है, that I need to make reversal under rule 42 in my GSTR 3B returns, right? और इसमें हम ऐसा भी मान लेते हैं कि एक नॉन बिजनेस के लिए भी कोई एक्टिविटी हुआ है नॉन बिजनेस के लिए, तो उसमें क्या करना था, 5% ऑफ कॉमन आईटी से हमें डिडक्ट करना था, तो 125 into 5% 6.25, राइट? तो जो कॉमन आईटीसी था 125 रुपए का, उसमें से 50 रुपीज एंड 6.25 वो हमने दोनों निकाल दिए, which is reversal. So eligible ITC will be 68.75. Total eligible ITC will be 200, जो मेरा पूरा taxable के लिए था, और 68.75 to 68.75. However, the disclosure in GSTR 3B return वो कैसे होगा? GSTR 3B में हम इसको दिखाएंगे कैसे? तो GSTR 3B में हम 325 क्रेडिट पहले पूरा दिखाएंगे, जो ऊपर दिखाते हैं क्रेडिट अवेल्ड, उसमें 325 पूरा दिखाएंगे, और फॉर नीचे रिवर्सल आता है, रिवर्सल अंडर रूल 42 एंड 43, उसमें से 56.25 रिवर्सल लेस कर देंगे. सो 325 ITC अवेल्ड, 56.25 ITC रिवर्स, and accordingly 268.75 will be my net eligible ITC, right? So I think I hope I am clear about this working of the rule 42. Still it is complex, but if you go twice or thrice with this formula, you will definitely able to understand the working of this rule 42, right? Now rule 42 was for the input and input services, and now rule 43 is regarding the reversal, right? So reversal of the capital goods, ITC of capital goods. So this is for the input or input services. Formula I can say was quite easy than the formula for the capital goods. Capital goods formula was quite difficult, and specifically if you number of the capital goods, you have purchased one machine in this month, next month another machine after 3 months, some other assets after 5 months, then it will become more difficult. But at a present we will understand with the example of one asset only, right? So how we'll work out the reversal of the ITC of capital goods. So what first is says, amount of the input tax in respect of the capital goods used exclusively for non-business purpose or exempt supplies shall be indicated in GSTR 3B still and not be credited in electronic credit ledger. So basically ये क्या कह रहा है कि capital goods which is used exclusively for the exempt supplies, right? In our case we have two products, A taxable, B exempt. So वो B product है वो मैं manufacture करता हूँ, और वो मैन्युफैक्चर करने के लिए एक स्पेसिफिक मशीन की जरूरत है जो सिर्फ और सिर्फ बी ही मैन्युफैक्चर करता है, दूसरा कुछ नहीं होता है. So that machine is used for manufacturing of the product B which is exempt, then I will not get credit on purchase of that machine. That machine may be taxable, ITC, GST must have been charged on that machine. I have paid the GST, still I will not be eligible for ITC because that machine has been used exclusively for exempt supply, right? Similarly, any capital goods which is exclusively used for the taxable supply. In our example only, product A. Product A is taxable and I have purchased one machine specifically manufacturing of product A. So I will be eligible for full credit of that purchase of machine which is used for the product A, right? So exclusive exempt है तो नहीं मिलेगा, exclusive taxable के लिए है तो पूरा मिलेगा. Now the issue comes, amount of input tax for remaining capital goods shall be denoted as A, right? So I have purchased 5 machines. Out of the 5 machines, one is exclusively for exempt, वो पूरा नहीं मिलेगा. One is for exclusively for taxable, वो पूरा मिलेगा. अभी जो बाकी 3 मशीन बचे, वो 3 मशीन ऐसे है कि जिसमें पार्ट ए भी बनता, प्रोडक्ट ए भी बनता है और प्रोडक्ट बी भी बनता है, टैक्सेबल भी बनता है और exempt भी बनता है. तो those 3 machines का जो ITC है, that will be regarded as a common ITC or common ITC of capital goods, and वो regarded denoted होगा as a. और फिर हमको क्या करना है कि वो 3 मशीन्स की ITC का ही रिवर्सल करना है, दूसरा वो 2 को भूल जाना है. और रिवर्सल करने के लिए we will assume the useful life of the machine as 5 years. It is provided in the act that the useful life of the machine is 5 years, right? तो 5 years को हम कैसे डिसाइड करना है? 5 years means 60 months, right? सो हम क्या डिसाइड करेंगे कि जो पूरा से फॉर एग्जांपल वो 3 मशीन का आईटीसी है उसको हम डिवाइड बाय 60 कर देंगे तो ईच मंथ का आईटीसी मिल जाएगा और फॉर ईच मंथ हमें फॉर्मूला के हिसाब से रिवर्सल फाइंड आउट करना है. डायरेक्टली हम क्या करते हैं कि एग्जांपल में जाते हैं तो वो दैट विल बी मच यूजफुल, राइट? हियर व्हाट वी हैव सेड इज 3 machines purchased A, B and C. A is exclusively for taxable, B is exclusively for exempt and C is used for both, right? So A का 120 का क्रेडिट हमको पूरा मिलेगा, B का 120 का क्रेडिट बिल्कुल नहीं मिलेगा और C का जो 120 क्रेडिट है that will be regarded as a common credit. So which will be regarded as a denoted as a ITC of machine C used for common purpose, useful life is 5 years, 120 is the credit, right? So अभी क्या करेंगे? 120 डिवाइड बाय 60 months. So each month का आपका एलिजिबल क्रेडिट कितना हुआ? 2 rupees. 2 rupees is the common credit for each month. अभी क्या करना है? Every month you have to find out the reversal out of that capital goods credit, right? So say for example April 21, ये अपने एग्जांपल में 1 April 21 को हमने मशीन परचेज किया था. 1 April 21 को एक कॉमन मशीन परचेज किया था जिसका आईटीसी था 120, राइट? अभी हमको उसका रिवर्सल वर्कआउट करना है तो कैसे करेंगे? 120 डिवाइड बाय 60 किया 2 rupees. तो अप्रैल का जो प्रोपोर्शनेट आईटीसी मिला वो है 2 rupees. नाउ फॉर दैट अप्रैल मंथ व्हाट इज द एग्जेम्प्ट सप्लाई एंड व्हाट इज द टैक्सेबल सप्लाई? सो एग्जेम्प्ट सप्लाई है 2500, टैक्सेबल सप्लाई है मतलब टोटल सप्लाई है 5000, राइट? सो 2 rupees into 2500 डिवाइड बाय 5000. सो क्या मिला? 1 रुपया क्रेडिट मिला मुझे, which is my credit to be reversed, right? सो क्या करना है? अप्रैल मंथ के लिए मुझे 1 रुपए का क्रेडिट रिवर्स करना है. टोटल क्रेडिट मेरा 120 था, उसमें से हम उसको 60 मंथ्स में डिवाइड किया तो अप्रैल मंथ का क्रेडिट 2 rupees आया और वो 2 rupees में से वो फॉर्मूला के हिसाब से मैंने रिवर्स किया 1 rupees, राइट? सो ये जो एक्सरसाइज मैंने अप्रैल 21 के लिए किया, दैट एक्सरसाइज आई नीड टू फॉलो ईच मंथ for the next 60 months. Understood? So अप्रैल में मैंने 2 rupees फाइंड किया, उसका फॉर्मूला अप्लाई किया. फिर मई में अगेन मेरा क्रेडिट तो कॉमन क्रेडिट 2 rupees ही रहेगा, 120 डिवाइड बाय 60. Now that 2 into exempt supply which may be different. Next month maybe exempt supply 1000, total supply 5000. So 2 into 1000 divided by 5000. In June 2 into 3000 divided by 5000. So each month I need to take exempt supplies and total supplies and will be multiplied by 2 and I will get the figure of reversal and in that each month I need to make reversal of that ITC. So this is quite complex formula and above all that reversal, because I have already availed the ITC of 120 and I'm reversing month by month. So when I am reversing the next month or next to next month, I am supposed to make reversal along with the interest, right? I also need to make reversal along with the interest. I also need to pay on such interest because I have utilized 120 in April and I am making proportionate reversal in next 60 months. So I am supposed to pay interest, right? So this is all about Rule 43, working of the Rule 43 for the capital goods, right? Now these are the last 2-3 slides regarding this Rule 42 and Rule 43. Now this will be understood. Rule 43. Rule 43 is for normal businesses. What happened in the case of construction activities? You must be aware that at present in construction activities for the residential unit there is a rate of 1%, 5% without ITC. So in construction activities there is no ITC, right? But in commercial unit I can avail the ITC, right? And in that case, if I have 100, I am constructing one commercial complex of 100 offices. And out of 100 offices, 50 have been sold before the completion. I will pay the GST on 50. 50 have been sold after the completion. I will not pay the GST on the 50. Then again, in that case, proportionate reversal will come into picture. Then how 42, 43 will apply. So 42, 43 rule will remain as it is. But only thing is that this reversal need to be find out for entire project. Here we are finding out for each month and then yearly basis. But for construction activities, I need to find out for entire project on entire project basis. And E and F, exempt supply and total supply, will be measured in base of carpet area, not the revenue. Here what we have seen, turnover of exempt supply 2,500, total turnover 5,000. But here turnover nahi, carpet area. Carpet area of exempt supply that is sold after the completion is 2,000 foot and total carpet area is 10,000 feet. So E and F will be determined based on the carpet area, right? And here, and all the entire ITC will be considered as a common ITC. No ITC will be considered as a exclusively used for taxable. Entire thing will be common ITC. So basic things in construction, all ITC common ITC. E and F is in the carpet area, and working should be made on the entire project basis, right? And these are the some practical issues, basically whether the credit can be availed on the basis on intention of use when the actual usage of the input or towards taxable exempt supply not known at the time of purchase. So what we have seen is that ITC is for exclusively for taxable, exclusively for exempt, or for common, right? But what if my purpose is not decided? I have purchased the goods, or I have purchased the machine which is still not put to use. So I am not aware whether that machine will be used for the taxable or exempt. Then what happens? Right? So it is a burning issue. Still no answers is found. Right? But as per my opinion, we can take the credit at the time of purchase. Right? And then based on the actual utilization, we can apply the rule 42 and 43. Similar case with the packing material purchased for the exempted goods. I have purchased packing material for exempted goods. I have not availed ITC. But later on, it is actually sold as it is. So not utilized for the exempt product, and I have sold the packing material. So again, I will need to pay outward tax. Then what will happens with my ITC, right? Or even if I have exported that packing materials, then what happens with my ITC? These are the very much practical issues, and one need to take calls based on their text of the cases. Similarly, in the case of the hospitals, hospital healthcare services, exempt services. In the hospital, there is also medical store, right? Pharmacy. In medical store, there are various medicine which are taxable, and some of the medicine are exempt. Now everything is under the one entity only. So in that case, when I am going through the formula of 42, 43, what will be the exempt and what will be the taxable supply, right? Taxable supply will be the taxable medicine sale, but exempted supply will be only exempted medicine sale or entire exempted sale, exempted medicine plus exempted healthcare services, because healthcare services figure will be much higher, right? So in my opinion, entire exempted services we need to take care, because medical store as well as the hospital are under the roof of one entity only, right? Last thing, what if capital goods put to use for taxable supplies for past year and then put to use for exempt supply? So I have purchased one machine. For first 5 years, I utilize only for the taxable supplies, right? So I will not go under the rule 43. And after 5 years, I've started utilizing the machine for exempt supplies. Then what will be the case, right? But as Act has provided to us the useful life of 5 years, and that useful life of 5 years has been over. And then after that, if I utilize it for the purpose of the exempt supplies, in my opinion, there is no reversal required, right? So these are the some basic issues of the rule 42, 43, right? And at last, I have tried to prepare one summary of the flow of the ITC, how you would go with the concept of ITC with the flow of the ITC, right? First of all, for any inward goods or services, we need to find whether the conditions of section 16 fulfilled. Initially, we have seen the section 16 conditions. I have received the goods, make the payment of the goods, supplier has paid the taxes, I have tax invoices. All these conditions are fulfilled. If yes, ITC available. No, ITC not available, right? Now I have fulfilled the conditions of section 16, ITC available. Then again I come down. If specifically blocked under section 17.5, yes, I have fulfilled the condition of section 16, right? But the credit is for motor vehicle. I have purchased a 4-wheeler, right? I have purchased the car. Then it is specifically blocked under section 17.5. So if it is specifically blocked under 17.5, ITC will not be available. If it is specifically not blocked under the 17.5, then again ITC is available. Now this is second step. Now we go to the third step. ITC is eligible as per section 17. It is not blocked under 17.5. Then third step, whether that ITC is used partly for taxable and partly for exempt, or partly for business and partly for other than business. If yes, it is partly used for taxable and exempt, then go to the rule 42 and 43 and make reversal as per the working of the rule 42 and 43. If ITC is not partly used for taxable, partly for exempt, it is entirely used for the taxable, then full ITC available, right? And last, one more condition, whether payment within 180 days to the supplier has been made. If supplier payment has to supplier has been made, then full ITC available. There is no issue on that ITC. If payment has not been made to the supplier, then I need to reverse that ITC after 180 days along with the interest. And once I make the payment to the supplier, then I will again reclaim such credit, right? So I hope this summary flow of the ITC will be useful in understanding, right? I have tried to cover the concept of ITC, reversal of 42, 43, and at last the entire flow of the ITC. I hope this session would have been useful to you, and I again thank for the Rajkot Branch of WICASA for providing me opportunity to share the knowledge with all of you. And now let's have the questions if you have any of the questions.
Thank you. Thank you, CA Abhishek Doshi sir, for give us such an amazing information about refund of ITC under GST. Now, I would like to request Jeet Kakkad, Vice Chairman of Rajkot Branch of WICASA, to take the query of the attendees, followed by vote of thanks.
Yes. Am I audible?
Yes.
Yes. Sir, I'll be sharing the screen. Just
Okay.
yes. Sir.
Okay. So question one, sir, will it affect in the case of transportation of goods under block credit if the goods are under exempt supplies? Block credit if the goods are under exempt supplies. I'm not getting exactly the question, but I'm presuming that regarding the motor vehicle, I have purchased the motor vehicle for the transportation of the goods, right? And
Right.
that goods is exempt category. So if goods is under exempted goods, then it will not affect because the transportation activity I have procured for the transportation activity, and I will still be eligible for the ITC. But that if transportation activity itself is exempt, right? If it is transportation itself is exempted, then I will not be eligible for credit. Yes. Next slide.
Next question, sir.
Is there any time limit for reversing the ITC once we know that it is to be reversed? If yes, then what is the penalty interest leviable? Right? Definitely there is a time limit for reversal of the ITC, right? Depending on the which type of the ITC. If it is rule 42, 43 ITC, then you need to make reversal every month and then at the last annual reversal, right? And if you have done timely reversal, then there is no interest applicable. Otherwise, interest will be applicable. In case of any other ITC reversal, if you have claimed wrongly the ITC in the month of April 21, you have wrongly claimed the ITC of 100 rupees, and then in September 21, you realize that I have claimed wrongly ITC, and you are reversing the same in the September 21. Then you are reversing in the same September 21. You need to pay the interest for April to September 21, right? But again, if that ITC is lying with me, I have not utilized that ITC, and I am reversing the ITC from my ITC balance only, then in my opinion, I may avoid the interest. Otherwise, interest will be leviable, and on reversal of the ITC, interest is charged at the rate 24% per annum.
Okay. This is the next question, sir. Sir, is it visible to you?
Given under the rule 42,
Yeah.
43 is compulsory. Definitely we have to go with that formula only, and it is not advisory. We have no other way out. We have to follow the rule as formula as provided under rule 42 and 43.
So this is the last question.
Last one is in case of export business, license sale is considered as exempt supply, and at the same time I'm also getting duty drawback. Then whether the same is also considered as exempt supply? No. Very good question. The license sale is considered as exempt supply, and I need to make reversal. But duty drawback is not exempt supply because duty drawback is not supply per se, right? Duty drawback is not a supply under the GST Act. It is a duty. It is a drawback. Duty drawback. You are getting the tax your tax back. So it is not supply, and once it is not supply, there is no question of the exempt supply. So for duty drawback, there is no reversal required. But for license sale, it is a supply and exempt supply, so reversal is required.
Right. Thank you, sir. I guess this was all. All the queries are solved. So thank you, sir. Moving on. Now, I would like to take the opportunity to present a formal vote of thanks to you, sir. Respected Abhishek Doshi, sir, Session Speaker, CA Bhavin Doshi, sir, Chairman of Rajkot Branch of WICASA, WICASA Chairman and Chairperson of Bhavnagar, Bhuj and Gandhidham branches of WICASA, and all 4 WICASA teams along with the attendees. I feel honored to have been asked to propose a vote of thanks to sir. I, on behalf of all the 4 branches, extend a very hearty vote of thanks to you, sir, for making us learn and understand one of the most important and sensitive topics to be dealt with under the GST law, that is reversal of ITC under GST. I especially liked sir's speech when he conveyed and explained the topics in very lucid manner along with the examples, which were very helpful in understanding the concepts. And especially the summary, sir, it was a very concise gather up of the whole session. My sincere thanks to you, sir, for accepting our invitation for this webinar and giving your valuable time from your busy schedule. I would like to extend a very special thanks to you, sir, for accepting our invitation. Thank you, sir. As no program can become successful with a single person, so I extend my big thanks to our WICASA teams for the support. At last, but not the least, I would like to heartily appreciate and recognize all the attendees for their active participation in this webinar through questions and queries. Thank you all for making this session successful with your contribution. Thank you. Over to you, Vishal.
Thank you, Jit. This was the 3rd day of the 5 days GST knowledge series. I hope you all enjoyed today's session. We aim to organize the best value events for the students, and your support is solicited hereby in form of active participation therein. We shall now meet you all on the day after tomorrow on 5:30 p.m. for the 4th day of 5 days GST knowledge series on the topic Excel as analytical tool for various reconciliation of books with GST and reports by CA Maulik Bagdai. Please do provide your feedbacks and suggestions to this session, which shall enable us to plan effectively for the upcoming events. With these words, we shall end this session. Stay home, stay safe.
Yes, thank you all.